Hello everybody, this is Eddie Ghabour, co-founder of Key Advisors Group. Please subscribe to our YouTube channel for up-to-date videos and educational videos on our opinions of the market and the economy, and some videos that give you some action steps that you could consider doing for your family based on your goals, objectives, and risk tolerance. So today I want to talk about why we continue to stay pretty bearish. And we discuss one of my TV interviews. You know, I've got the nickname Common Sense Bull. I think a lot of that's probably because I'm usually very bullish. But look, the bottom line is our clients are paying us to make decisions based on the data that we see. And there are times to be very bullish. There are times to kind of be in the middle. And then there's times, in our opinion, that you have to kind of take an extreme stance that things could go wrong in a big way and not be afraid to say it, not be afraid to make changes. And that's exactly where we are right now. You know, we started to take more of a cautious approach in November. For those of you that follow us on our TV interviews, you know that. And we continue to be even more cautious today as we're here in February, heading into the second quarter that we think is going to be the most problematic. So here's a couple of things that we're looking at that really has us concerned that we think is not fully priced into the market. Number one is the consumer. You know, when you take a look at no stimulus checks and how high inflation is and look at where, I mean, my goodness, look at gas prices, look at food, look at rent. I feel sorry for the retail investors out there and the consumers that live paycheck to paycheck, trying to figure out how they can overcome this major hurdle. And so we feel like the consumer is going to be really strapped this year. And spending on discretionary items are going to come down in a big way. And I think that's going to be reflected when you look at earnings. You know, you look at these earnings from these retail companies. I don't understand how they're going to report positive earnings with the consumer being strapped the way that they are. Again, that's our opinion. We'll have to wait and see if it materializes. Secondly is when you look at the wage growth and the inflation on wages, this is something that's going to start hitting corporate America's bottom line. And so when you look at earnings growth going into 2022 versus what we saw in 2021, I think you're going to see polar opposites. I think you're going to see earnings that are decelerating, and you may not have earnings growth in some industries or some companies, I should say. And the earnings growth that you'll see in other areas may be very, very muted because of the inflation that they're dealing with, coupled with the fact that the consumer demand may not be there for some of these discretionary companies. So you have inflation that's hurting the consumer. You have earnings that we feel are going to be really coming down in a very material way. And number three is the GDP number. I think the street is way high on their predictions of 4+% GDP. Based on the research that we read and look at, you know, we could really disappoint to the downside. And if we do, and that's not priced into the market, again, I think you're setting yourself up for a major reset. You couple those three things on top of the fact that the Fed is really late to the game in regards to tightening. And I just don't understand how that is anything but bearish. So again, this is one of the worst setups I've seen in my career. This is why we've been taking a very cautious stance since November. And we're not going to change that stance until the data either proves us wrong or we get the correction that we've been waiting for and we decide to go bullish and start buying these asset classes that we could potentially get at a 10 to 25 to maybe even 30% down draw. So we're trying to educate investors because we don't want to see anyone get hurt, whether it's our client or someone that's not a client. You know, I think as fiduciaries, we have to do as best of a job as possible is trying to educate the investment community on some of the things that maybe aren't rosy. You know, we always like to paint a rosy picture sometimes, but there are times and periods of time in history where the picture is not rosy. And when it's not, again, you cannot be afraid to make a call that's non-consensus. And more importantly, you can't be afraid to make a mistake. And look, we've made many mistakes in our careers and we'll continue to make mistakes, but you have to learn from them. And when you know that you're wrong or when you're proven wrong, you can't be afraid to admit it and make an adjustment. So far, humbly, we haven't been proven wrong since our call in November when you look at a lot of the carnage that's out there. But we'll have to wait and see. It is of our opinion that things are going to get worse before they get better in this market and the economy. And remember, the markets will usually go down first before it's reflected in the data. Don't wait until the data is bad. By then, in our opinion, you've missed it. The last thing I'll say on this, and then I will end, is Look at the bond yields. I think the high yield bond market, the 2 and 10-year spreads on the Treasury, is giving you the warning sign. The bond market many times is smarter than the stock market, is some people's opinion, and I happen to agree with that. And I think that's flashing warning signs that many continue to seem to ignore. And I think they're ignoring it because we've been spoiled with snapback rallies. And my fear is we may get a dip that doesn't snap back very quickly. And if you haven't protected yourself from that, or at least try to risk manage in a way that helps lower volatility, then you could be putting yourself in harm's way. Again, that's our opinion. Only you can decide for you and your family what the right move is for your portfolio. Thank you for watching. I hope you got a lot of value out of today's video, and I hope you and your family make this a winning week.